Hey guys, Fez here. In this video, I'm going to teach you one of my favorite trading strategies. This one has made me a lot of money, okay? And I'm actually giving it away for absolutely free to you guys. So the very first thing is you want to go on to the 4-hour time frame, okay? And I mean the 4-hour time frame, okay? And you want to look for, this strategy is basically similar to the very first strategy that I uploaded. So if you haven't watched it now, you can watch it. You can watch it right now and then come back to this video, but it's not necessary, okay? Because it's a little bit different from the first one. But actually almost the same, if that makes sense, okay? So similarly, you want to be looking for an ABC pattern. Now, bigger the pullback, if the pullback is big, right? And there will be more chances that the trade is going to go into your direction. Why? Because if there's a big pullback, right, on a 4-hour time frame, this high over here becomes a significant swing high. And a lot of people, they have their eyes on this level, and there's a lot of liquidity around this level, above this level, okay? So oh my God. So when you have something like this, you wait for price to take out the liquidity, okay? Once price take out the liquidity, I don't care how many candles go above it. It should not go like that. It should not go higher that much, okay? It can go to a certain degree, okay? Something like this. It doesn't matter if price creates new highs and all, but it should not go that high. To be honest, something like this, okay? It's clearly a breakout, but it can go to a certain distance and then it should come back, okay? So once the price, so let me delete this. So once the price is outside our line, so you can see when the price goes up, when the price sweeps the liquidity and is outside our line, you want to drop down to the 15-minute time frame, okay? So 15-minute time frame. And on the 15-minute time frame, similarly, just like the first video, you're going to see a structure like this, okay? Perfect. So you want to wait for a change of character, right? Keep this low. On the 15-minute time frame, okay? It could be a single candle, or it could be a low like this. It just have to be a structure. So it could be a bearish candle, and that would be considered as a structure as well, or a low as well, or it could be this. And I'm going to show you the example. It's going to be clear to you guys. So once you have a market structure shift or change of character, there are two things that you can do. You can take your entry from the closest fair value gap. I do not recommend that. If you fear on missing out the trade, then you should take your entry from the closest fair value gap and put your stop loss at the high, okay? Simple as that. But just like me, if you want to take your entry from the extreme order block, in this strategy, I do not take my entries from the fair value gap. I take my entries from the extreme order blocks, okay? So take entry from extreme order block. Very simple, guys, okay? So yeah, once you have your entry here, you put your stop loss at the high, okay? And you target the low of the B leg, okay? Very simple. So price is going to go into your level and it's going to go down. Now here's the thing. In my first strategy video, I told you guys that there should be only one candle that goes above the line, right? Something like this, and price then reverses instantly. But in this strategy, since it's a 4-hour time frame, it doesn't matter. As long as it doesn't go that far, you should be good to go, right? So let's say if it goes to this level, something like this distance should be normal, okay? You have to judge it. So if it's like a breakout, something like this, you don't want to take a trade, even if it comes back, because it could be a pullback, okay? But if it goes like this, something like this, and it reverses back on the 15-minute time frame, you take your entry. So yeah, I'm gonna give you guys a few examples. So see you. Okay guys, one more thing that I forgot to tell you guys, just like in the first trading strategy video that I uploaded, the structure that breaks must be inside this, below this line. Okay, it should not touch the line and create this low and then go up. If it does, then your valid structure would be this. Okay, so let's say price came back up, touched this line, or went a little higher than this line and then created this low, and then price went back and broke this structure. This for me would not be a valid market structure shift. Okay, I want to see already made structure before price swept the liquidity. Okay, so I repeat it again, you should only be looking for a low that was created before the liquidity sweep, okay, or touch on the line, if that makes sense. So let's move on to the examples now. Okay guys, so here's an example number 1. As you can see, we have the A leg, then we got the B leg, and we are on our way to the C leg. So before the C leg is complete, you want to draw down the line, right? You want to wait for liquidity sweep. So price sweeps the liquidity right around here. You want to go down to the 15-minute time frame, and you want to spot the structure that was created before price swept the liquidity. So as you can see, price swept before sweeping the liquidity, price left the structure, right? It was not created after touching the line. It was not created after sweeping the liquidity, but it was created before price went and took the liquidity, right? As you can see, we have the boom, boom, and then we have a touch. So this is a structure. So you wait for this, for the price to break the structure, and boom, this is your market structure break. Now if I go here, you can see there's a tiny bit of imbalance around this level. So what I would do is I would mark out this auto block, right, and I would put my stop right below there, because on the smaller time frame there could be, you know, some fair value gap around this level, or there could be an auto block here. So I want to be safe. Okay, so I put my stop loss at the low, and I take my entry here, put my stop loss right below this level, and my take profit level would be the high of the B leg, right? Remember, we have the A, B, C, right? So let's see if we get our entry. Oops, my bad. And I take my profits here. So let's see. We got our entry, and as you can see, there was some sort of fair value gap because we are looking at the higher time frames, right? So there's a possibility there could be a smaller time frame fair value gap or something like that. So you make sure that your stop loss is always below the low. I recommend you not put it below the auto block, but always below the low. So if I play this through, boom. So look how price moves, right? This is all algorithm, guys. You see how price swept the liquidity. There was some wick off going around here, and then we have a beautiful push to the upside, securing 6.28 risk to reward. I did not take this trade, and I already knew what's going to happen. Of course, this is hindsight, but once you're going to back test, you're going to find it amazing. So let me give you guys one more example, and I'll end the video. Okay guys, so here's example number 2. So as you can see, we are on the 4-hour time frame. We have this huge push, which is the A leg, and then we have a huge pullback. So this is the B leg, and as you can see, they are huge. So, and we're also on the 4-hour time frame, so this is a very good setup, and it happened recently. So we mark out the high, right, and we wait for price to sweep the liquidity. Very simple. And as it seems, price took out the liquidity, and then if I go to the 15-minute time frame, you can see when we took out the liquidity, before taking out the liquidity, we left this structure, right? So we will be waiting for price to break this structure before we can take the trade. So does it do that? Let's see. It does not. So what I will do is I'll go back to the 4-hour time frame and I'll wait for price to come back again. Now the price is back. So let's see if it can break the 15-minute structure. Okay. And yes, it did break the structure, as you can see. Now let's go back to the 15-minute time frame. And as you can see, this was a structure on the 15-minute time frame before price swept the liquidity, right? So now the structure is broken and our mission is to find the extreme level fair value gap. So if I go here, you can see that every auto block is mitigated. Every fair value gap is mitigated. So there was this imbalance, this got filled here, and there is this auto block right around here, as you can see, with fair value gaps. So auto blocks with fair value gaps are the best ones that you can choose. Okay, so for me, this is the auto block, and I'm going to take my entry from this extreme level auto block. So I'm going to go back and put this here, and I go back here just to fast forward the things. Let's go. Okay, so we are going up. So I'm going to go back to the 15-minute time frame, and this is our auto block. So I'm going to take my entry here. I will put my stop loss right above these little highs, because there could be some sort of fair value gap or auto block on a smaller time frame. So I do not want to risk a beautiful setup. Remember that, guys. Okay, so we have our trade set up, and let's see if we get our entry. Okay, so we got our entry right now. As you can see, let me put this here. And for the take profit level, I would be taking some partials here. I would take some partials here. And my target would actually be this level. This is insane, okay? Because this is the low of the B leg. So you can see this would be a 44 risk reward trade. But let's see how this trade goes. So I have my setup, and let's see how this plays out. We got our entry, precise entry, as you can see, right? And if I play this through, beautiful. And if I keep on playing it, okay, so the price is going down. It's on its way to its original target. It may reverse. Okay, there are no guarantees. That's why I always tell you to take profits along the way. So you can see, even if you took this trade and took your profits here, this would have been a 1 to 10 risk to reward. How crazy is that, guys? So I'm giving you a gem, and you should only keep it to yourself. Also, if you are interested in more trading strategies, you could join my mentorship. It's not necessary, but you know, if you want to learn more, then there's a way. So yeah, guys, I hope you enjoyed this video, and if you held the trade till here, this would have been a 16 risk reward trade out of nowhere, guys. So thanks for watching, and see you guys in the next video.